you will be able to comprehend, understand, and be able to enjoy what happens in these lessons. So, ladies and gentlemen, I would like to let me first get the general, yes. Then I get the big man also in the house. They will be able to take us through throughout this week, starting today up to Friday. These 3 days, you will be able to get the most important thing you need to know when it comes to the technical analysis class. Thank you so much. Welcome, Leader Saul, and welcome, Coach Musa. Happy to have you with us this fantastic morning.
All right. Thank you very much, Leader Julius. Thank you very much, the Crypto Ambassadors team. I'm privileged to be taking you through today's session. And just like you said, I think we shall be going through from today until Friday. And let's see how best we can utilize this short time frame. And if need be, and I see probably the areas of coverage is some important areas of coverage are still left out. Probably I may chip in at the start of next week. Yeah, and always when need arise. And I'm always very happy to support our community of the crypto ambassadors, because that is my mother. That's mother, I would not call it an organization, but it's our mother umbrella. We all subscribe to the crypto ambassadors, literally, much as we may have our own independent subgroups and academies, but we all, the crypto ambassadors, a big applause, because it's one of those fastest growing group that intends to, or that has been put on board to try to educate the masses and create awareness with regards to what cryptocurrency is and the vast opportunities that are available that whoever is willing would probably take advantage of, and then join the bandwagon, join the rest of the team who are trying to make something out of it. So I'm really very happy to be taking you through today's session. My name is Coach Musa, and I'm also very happy to see a number of leaders on board, like Leader Saul. I'm really very happy for what you're doing to the community, for the education contents, both on the different social media platforms. I'm always closely monitoring. Yeah, my strategy is quite always different, and so very many people may not be in position to understand, but strategies varies. But remember, at the end of it all, the intention is to all arrive at the same point. So I'm happy and very, very proud of you, my brother. I know since 2021, things have never been the same for you as well and the team that you've built. So it's a honor. Okay. Now today, I believe you guys had a number of sessions and you learned a lot. Some of them I was able to follow. Just that sometimes I get a little busy and then tend to do much of the personal work and personal trading. Just like I said, I'm so more of like a trader than a team builder, but I love building a team as well. Yeah, so sometimes I tend to so much narrow down to, making some money, because, this money is just like Jeff, not Jeff, this other guy here called what? Said that money is free nowadays. It's just a matter of learning how best to, to also get something, to get it out of whatever platform you're gonna get it. So, I believe you learned a lot, and from the area I'm going to start from today, I'm beginning it on the basis of a beginner. All right, I'm taking it that we have probably a few, if not many, people who have joined the crypto trading platform, but may not be so much conversant with what it really entails when it comes to understanding the market itself, how it fares, and how people arrive at opportunities of making trade entries and measuring take profits, establishing margin call drops or the different price drop levels at which you would want the robot to be executing buy orders whenever the market goes against you. That is if you're doing the sports market. But at the same time, also how best you could maneuver and take advantage of the uh, the futures market, the two-way market movement, and also, make money from. Because remember, as a sports trader, you're looking at one market and only one market alone. You're looking at opportunities of profiting if the price rises. If the price goes against you, you either wait if you have insufficient capital, or if you have some reserve of capital, you open some margin calls to allow you buy the dip, to buy the different price drop level. And in so doing, you'll be accumulating so much of these assets so that once the price finally bounces back in your favor, and then you'll be able to actually gather so much of profit. Because the secret is the reason as to why we encourage people buying the dip, because the money is in the accumulation, not in the fund. I repeat, the money, the profit is in the accumulation, not how much capital. You can have 1,000, enter at a go, the price goes against you, you'll have to sit back and wait until the price comes back to the entry price, goes above it, and then you profit. Then there can be someone with $1,000 capital, you distribute your capital accordingly, you divide it, and also reserve some for taking advantages of any eventualities of a market price drop. Buy more of the coins as the price is going down, and then as the price begins to gain, you will make so much profit compared to that person who just entered at once. So the aspect of wallet management, or what you would call capital management, becomes key when you're trading. All right. So that is just a tip of the iceberg about among the different things you ought to learn if you become a trader. I always tell people, once you join Reiki, you don't think you've come in an ROI platform where you're going to sit and the money multiplies itself in a strategy which I've never come to understand how that would work. But if you come into Royalty, you're coming to learn. You're coming to learn how this Royal Bot takes advantage of the crypto market as it is making for you the profits from the capital you have. And that is why you will tend to have these classes like this. It's a sacrificial class. It's completely a class, an opportunity that is offered to whoever is willing to learn. So it's free. It's just a matter of you having time, and then you do what is required. So that said, the crypto market, as most of you have always been taught for the old people, that it requires a little bit of understanding how it operates. Being a new thing to some people up to now, they ought to understand how people make money from it. Because I even see in social media, people are still not believing in crypto and the potential it has in actually helping you change your financial status. But the crypto market, especially the crypto trading market, has some areas that you need to set your focus on, especially when it comes to analysis. Depending on the kind of person you would wish you want to be in the trading arena, you can be a short-term trader and you can be a long-term trader. Most of the times, the long-term traders are referred to as investors. Now, whether you want to invest for long-term or take small repeated profits in the course of the build-up of the day or weeks, you ought to understand your market analysis. You ought to know when you make decisions to enter the market, all right? When you are actually supposed to make entries in the market. It is very important. And the common strategies that people use to make decisions on as to when to enter the market are actually three. And allow me share my screen. Let me share my screen. I hope I'm audible enough. I hope I'm audible enough, please. I don't want to leave anyone behind. Sometimes I get disturbed with my network. So let me just hope I'm clear. Please. Okay. All right. That's good then. So allow me share my screen. Then see how we move. Okay. Okay. So let me come here. Let me do this and clear my chat. All right. So there are, since this is the beginning, I'm going to build a little background and then we see how we move. So there are three market analysis, types of market analysis that we make. I may not go into details so much. I will rather focus on one that we're going to, expound in the course of the week. There are three market analysis strategies that you can use, especially as a trader. There's what we call the fundamental analysis, which in most cases, fundamental analysis. We have the technical analysis, and then we have the sentiment analysis. Now, to begin with, from the lower point, with the sentiment, literally, it does not require really doing much. If you're a fan of social media, if you're a fan of internet, and you have a lot of time doing, I wouldn't call it doing nothing, but just reviewing and seeing what happens around the world, you could be good at sentiment analysis. With sentiment analysis, basically, what this entails is that you just pay attention to what is trending. What is trending geopolitically, okay, economically, what is happening, because it has an immense effect nowadays in trading. It has a number of effects nowadays with regards to trading. Not so much as it is with Forex, but at least to some extent it does influence the crypto market. So sometimes you need to keep up with what is trending around the world. I believe you've seen leader Julius at times, and a couple of other leaders who tend to share, updates on what is happening, especially with regards to geopolitical sphere, and then also what is happening around, the events related to crypto or that may have effect, on crypto. It's very important. And how you get to know about those information is basically by following social media platforms or handles, following up some of the influencers, not all influencers. Okay, there's some influencers who who may not be the best to follow, but some influencers are good. At least they tend to have reliable information. So you tend to follow them, and what is happening around there, they keep updating. So those updates plays a very key role, especially if it is a positive news. There's a likelihood that if you make entry, especially if the news example, was on a particular asset, and then it is a positive news, it will be the best time and opportunity for you to make entry early, like buy before people FOMO, before people jump in. Go and take position, buy and hold and wait. You will have a very big chance of gaining so much. By the time people are FOMOing, people are joining, people are buying, they'll be helping you skyrocket to the moon. You find yourself just moving to the moon because you would have made an earlier entry decision. You get that? So it's important. It's critical. So I may not go so much into details of that, but basically that's what it entails. You follow social media handles, especially with regards to that particular project. The project surrounding that crypto. You can follow those. If the influencers, you can track through the fear and greed index and a couple of other things. There's nothing so much really that you're required to do with regards to sentiment analysis. Then there is the fundamental. Now with the fundamental, this is where you basically go a little detailed. It's more of reading. It's more of research, right? It's more of research with fundamental analysis. It's more of research in the area pertaining the project behind that particular crypto or token, right? And when you're doing that, basically you go deeper. You don't stop at honest, sentiment. Now, this is you tend to go so much into understanding the intrinsic value. You determine the intrinsic value, right, by possibly evaluating its underlying projects, like utility, the technology behind, like market potential. Like there are a lot of things you surround there. You need to know the supply, the total supply, the fully diluted supply, what is still to be released. That is the information that comes around the total supply. Yeah. Because you will know if you have a total supply and the circulating supply, you can be in position to get the balance, which is what has not yet gone into the market. So you see the quantity and relate the potential effect it will have if at all maybe it gets added into the market and it begins going into circulation. So those are the information, yeah? And your objective, remember, is only to determine the intrinsic value, okay? Is to determine the intrinsic value. And it's a good strategy most of the time, especially for those who wish to invest on a given crypto for the long term. You see, for example, Bitcoin, people tend to so much rely and invest in Bitcoin because they know it's one of those coins that has a very big intrinsic value. It has very big potential for growth because of, what people are doing, how companies, big companies, whales, institutional investors are trying to chip in buying and holding. So people will tend to look at it as something that in the future may be of great value. So they will rather go and then buy when the price is low, and then they hold for a long time, even if you're going to be making profits, because there is a strategy of making profit along the way as the price is rising. So even if you'll be making profit, you don't sell everything, you sell bits by bit, you take off profit. Yeah, but at least you'll be retaining some for a long term as the value keeps on building up, right? Yeah, so that is with regard to the two. I hope we are still together. I'm still building a background, and before we could go through the final one, which is our area of focus, and yeah. Okay. Yeah. This guy is already saying he lost $10 in futures trading. Hey, okay, yeah. Welcome to the welcome to the welcome to the table of men. Yeah, even in the jungle, there's what we call survival for the fittest. There's that law of survival of the fittest. Yeah, only the fittest survives. Sometimes you need to be resilient. The challenge for us is when we have a challenge, we stop there and begin whimpering and begin crying and begin to give up, begin to have a lot of fear, instead of attacking the challenge, devising strategies of how best now not to incur the same experience. So we tend to now begin, oh, and we want everyone to know that we are crying, everyone to know that things have happened. But some of us have also lost. It's not, it's not the first, but we learn by, we learn. And the reason as to why we started this class, I remember back then with leader Julius, uh, we were we were happy. We joined when the market was good, so good. It was at the peak of the bullish season, 2021. I don't know. That was a year. Honestly, it was a year. 2021. I'm hoping maybe 2025 may be better, but with a lot of things happening, let's see. But 2021 is a remarkable year. It's a remarkable bullish year. It's a time we joined. Things were good, but then we got hit by the reality of this market. And it prompted us to begin sharing strategies, learning, and trying to help how best people can understand the business and do it as something that is bound to have challenges as well. All right. So we started these trainings, but those trainings were not there then, because the market was so good. You enter and you're out. You enter, even I would say even a child would decide to enter and makes profit. As long as he or she knows how to press the buy button. But that is it. That is it. So let's come back. Let's keep learning. And the strategies. The strategies in the futures market. There is a strategy actually that you can try to be a little bit consistent. The future market is a market that does not require greed. It humbles you to respect. It keeps you respected. Brings you on. It checks you very well. So, but there is always a way. Everything has a way. Yeah. So it should make you redefine, readjust. All right. All right, let's come back. I just wanted to make sure we are following. But then that was the first message I encountered. So it made me say something, at least. Yeah, so let's come back. Having looked at the two market analysis strategies of sentiment and then fundamentals, well, sometimes, let me just say this. Sometimes the fundamental is good. You ought to understand, you ought to also know the fundamental aspect of this market. Yeah, because there's one thing I've realized: if you fail to understand the fundamentals, okay, trust me, we have a number of coins that has come on board that does so much of the pump and dump, and then we have some projects that keeps on adding tokens almost every week, some every month. All right. And this rate may not be the best because it affects the supply, right? In a way that, when you flood, it's just this market is driven by supply and demand. So every other time when the market gets flooded by the same coin, there's a way it affects the world. It may not do so much. And if it will, then there's some whale who may pump and then dump for purposes of just making profit and then releasing the coin. So there are a number of them that are there. So it is equally very important for you to understand the fundamental. With the fundamental, is simple. Every crypto project is intended to address a certain problem. All right? All this, well, there are some that has also come on board of late that are just meme. There's nothing they're addressing. It's just excitement and then boom. It's formulated into a project. But most of them, the genuine one, are intended to address the world problem. And they are categorized into groups. There are those that are related to real estate. There are those that are related to, the financial institutions, whatever happens, transpires in the financial system. To call it transfers, the fee, anything related with transferring, the fees, the speed at which it is transferred, some of the things. So all of them were intended to address this problem. So it is important for you to know the kind of coins that you trade. Personally, there are coins I don't trade. Honestly, there are coins I don't, right? And for you to arrive at that, you need to understand the fundamental. You go and make reviews through the white papers of this project, yeah? Because through that, you'll understand the tokenomics of these coins, okay? The supply, the utility, distribution, inflation and deflation mechanism, some of the things, you'll understand it better, right? You'll get to know the team and partnerships that these projects have. If they're good partners, you have good investment companies, good partnership, then there is a bright future for such a project or coin, And then also maybe the adoption, the use case, because there's some crypto projects that really have very good use case. Like you can't help but use them. And those are good ones because they will be used often, and definitely there is a chance that always traders will be active on such trading these coins, because they will be used often, and those will be good. They can pump, they can drop, they can pump, and you make profits, from them. Yeah, so it's very important. It's fundamental. Let it go closely with the technical analysis, which is our center of focus as per today. All right. So it's an area we're going to channel so much of our energy in and try to dive deeper. And I just hope today to Friday, maybe good for us to try to look at, because I think the area I'm going to handle is not so complex, basically looking at one aspect of technical analysis. Yeah, because we have a number of them. Yeah, but I'll be handling one. Okay. We have a number of support tools used in technical analysis, so I'll be handling one. Yeah, so that is very important. That said, I hope all is well with everyone. Is that clear? Are we following? You'll forgive me if it is your first time to attend a class that is moderated, that is run by me. The approach may be quite different, but yeah, I hope you learn something. I hope you pick something out of it, yeah? The information may be important for you. And then the practical aspect, when you get there, may be equally important to you. So you need to just embrace it. Yeah, just embrace it. Yeah. All right. So let's look at the technical analysis, which is the third strategies that most people who are involved in crypto tend to analyze and have insights about the market. Now, the technical analysis, which is our area of focus, basically looks at the statistics. You look at the statistic generally that are generated by market activities. Yeah, how traders are buying and selling. They tend to bring about a structure in the market. So technical analysis is majorly centered around evaluating these assets, you can call them securities, by analyzing their statistics based on market activity. And this statistic, basically, you look at the historical data, price data, price data. And maybe you look at as well the trading volume. And all this should, of course, be based on demand and supply. That is the driving factor, right? So you just focus on those, on analyzing the statistic generated by market activity. Okay? That is technical analysis. So you majorly look at statistic. only. So that's where you focus on in the historical statistic. Now, why is it very important to focus on the statistic, or what we usually refer to as the price data? You know, we as traders and different schools of traders since time immemorial is that we, based on the belief that past patterns in price action can actually provide insights into future market behavior. How the price fared in the past would actually most likely happen in the near future. It's just like when you have, like in Uganda, there are periods when the price of fuel may come back to 5,000, maybe 100. I remember it used to even be 3,000, but I don't know. Things just changed. But then let's assume for the past 2 years, it's been, I don't know whether 2 or 3, it has been around 5,000, yeah, from 5,000 upward. So it goes to 5,000 up to around 6. I think there's a time we went to up to 7,000 Uganda shilling. Now imagine that previously the price was at 5,000, and then it rose maybe to 500, maybe to 6,000, and then the curve started coming down. You know that at some point, if this is the benchmark price, it's unfortunate for us here in Uganda. I don't know. I'm not so much into the government things, but then there are a lot of things that we have not standardized. Even in prices of commodity, like it can skyrocket at any time, it can change at any time. Anybody can just, you find there's a lot of differences in terms of the price at which a particular same commodity will be sold, within the same area, by the way. So there's no standardization. But let's assume that it was the standard price. There's a likelihood that, of course, the price is gonna, if it was 5,000, there's somebody tampering with my screen. I don't know who that is. Somebody is tampering. Yeah. Let me see. There's somebody writing on the screen as well, so I don't know. Okay. All right, let's come back. Sorry. So I'm trying to build the concept of us, basing on our belief on the patterns in price actions, yeah. Because it plays a very critical role in actually providing us insights into future market behavior, because we want to base on past data to predict the future, because it will be the basis of our decision. So if, for example, we had the price, let's say we begin our analysis when the price is here, all right? And we know that if the price rises, let's say this was 5,000, maybe it rose to 6,000. Yes, it will rise. But we also have a strong conviction that this price will never rise forever, right? There are moments when it will come, at least it will try to drop, right? It will try to drop, yeah? If it drops to a certain level, then it goes up again and then comes back to the very same level. There's a likelihood that most of the times, in terms of prices, people love odd number, yeah? Wall value, odd number. I mean, not odd, but wall number, right? So you'll find that the price is moving about specific level or range, yeah? So if you know that at some point you wake up and find the price is maybe somewhere here, you know that there's a likelihood that it is going to rise. That is what is sure. If you find it when it is very high, you're also certain that at some point the price will do what? Will drop. It may not drop exactly to the previous price level it started from, but at least it is going to definitely drop. So basing on that, having that idea can really help you make profit from the market. And that's what price action is all about, or what we call technical analysis. Okay? Yeah, so that is what drives us. That's what gives us the belief of making us analyze the market, analyze the statistical data with regards to the prices of the different assets. Now, when you're doing that, you can analyze the statistics of price data. You can also do it for trade, the volume. But at the same time, the real idea behind you analyzing, behind you making those analyses before making entry decision, is you want to have, this word is very important, a fair estimate. You don't want to enter blindly, right? But at least you want to have a fair estimate or prediction of what the future price movement or direction will actually be. You get that? You want to have at least a rough idea. You wanna have some rough idea in your prediction with regards to the next price movement or direction. And this is very important. It becomes very, very key in increasing your winning rate as a trader. Very critical, because it is within this, just like I stated earlier, that you'll be in position to know, first of all, how much to take from the market. You'll be in position to know tentatively the percentage dip. And because of that rough estimate, you'll be in position to also know or identify the possible price reaction level as the price is going where? Down. If your intention was that the price will go up and then the price goes against you, you will know the potential percentage dip, but at the same time, you'll also be in position to know the different price reaction levels that are most likely going to, you're going to encounter, or the price is going to encounter on its downward movement. So it is by knowing those different possible price reaction level as the price is going down where you'll be in position to measure and then establish as your margin call drops. Margin call drops, the different percentage drop levels at which you would want the robot to buy if the price continues to go down. You just want it to buy at specific price level when the price has dropped at certain percentage, not creating the margin call drop blindly. Sometimes we get, even me, sometimes we get unserious. Sometimes we take them for granted. In fact, we prefer so much establishing, estimating things. Yes, we just assume. We assume I'm gonna set 2 percentage, maybe 1.5, like we just estimate. But sometimes, if you are really a trader and you really want to take this as a real time activity, then you need to pay attention to the small details. It's critical. But humans are human. Sometimes we we forget, or we just don't take those serious. Yeah. So, but that's the picture. That's the picture. You're doing your technical analysis because you want to predict. You want to have at least some fair idea on the future price movement, so that you can see whether you can actually make entry or you first wait. Not that every other time you make analysis, you must enter the market. No. Not every other time you make analysis, you must enter the market. And not every coin you analyze, it is a must, you must trade it. You don't have to trade every coin you have analyzed. There's some coins that you may wish to trade them, but approaching its analysis, you open the chart and then see it's really not the best. The market is having no direction, no sense of movement whatsoever. Either it is ranging or it is completely showing no sign of any direction, like you're not sure. Even when you analyze, you are really not sure the direction it's going to take. Let it be. Leave it. Go for another coin. Later on, come and revisit and see. Possibly something would have worked out. Maybe a path would have been clear. Because it is not good to trade a coin whose direction is not clear. It's not. Especially if you're a unidirectional trader. sports trader. For you, looking at selling high, and then you're not certain of the direction, and you still want to trade because you love the coin so much. It's my heart. I love this coin. People love this coin. You'll be there. No matter what, I'll trade it. You want to trade it. Trade it. Trade it. But don't be emotional. This is not your coin. It's not your project. It's not about that, but that's the truth. Yeah, it's not anybody's thing. So for you, you're only looking at taking advantage based on your analysis, the idea you have, the skill you have, to try to tap from the resources that is in the market. Tap from it, but you don't control it. It's not yours. That whenever you enter, it's going to go your way. Or you fall in love with it. Even the owners do not fall in love with it so much. They also go for other coins to trade. Then for you, you're falling in love with it like it is yours. You'll be humbled, yeah? Yeah, so that is that's what happens. So not every those 2 points, take them very seriously. Not every coin you analyze you must trade. Yeah? And not every type you must trade. You don't have to trade every other time. Not every time. You must just trade. Oh, my capital is redundant. I must trade. My capital is redundant. I must trade. I'm not making money. I have to make money. They said there is so much money in the market. I have to make it. My capital does not have to remain redundant. No, no, no. It has to work. It must work. So want it or not, I must trade. Not every other time. No, you don't have to trade all the time. And not every coin you analyze, you must trade. Okay? Trade coins that has presented good trade entry opportunities. And if you're learning, if you're a learner, if you're through the learning, you do your analysis. And as I'm going to guide you when you're trying to analyze the market, you're literally preparing yourself for something, right? But if chance comes that it is really, you found it when it is really building up as you had expected, then you make entry. You don't have to do so much of analysis because at least with the picture you have in mind, things are falling out. But you're preparing yourself not to make entry at that very time. You're preparing the ground for a later time so that when you come back and find things are the way you had planned, bam, that's when you make entry. Yeah? Yeah, so I hope that is clear. I hope that is clear for everyone who is here. My strategy has changed, and the way I'm going to put this is I want people to, I'm going to give you what you're supposed to do. You're supposed to be the owner of your business, all right? So that if you're told there's any blame, you're going to throw it back to yourself. Because people are full of blames. People can blame. People blame so much. Everyone to point finger, but sometimes it is what it is. So let's try to own this business. Yeah. But price action is not an easy way to consider when we are to identify good entry point on the market structure. We majorly consider market trends, a key in trends, a key, the list is gambling. Hey, Kato, I don't know what you mean, but I will take it that you know what you're doing. And if you're good at price action, then that's good. That's good. Yeah, that's good. That's good. For us here, we give basic. We want people to be. It's good to explore. It's good to go an extra mile. We build and give basics. Yeah, so it's very important. And if you know, then try to, build. Let the team. If you have a team, put it in them. Let them know. Yeah. Yeah. Okay. So let's come back to technical analysis now. When we're doing technical analysis, or for us to do an effective technical analysis, we have different schools of traders, different groups of traders. I love calling them schools of traders. Just a minute. Okay. We have different schools of traders. who approach technical analysis in different ways. The groups of traders that just uses one support tool, some combine two, some combine up to three, you know. So it doesn't matter. You see, you can know the different tools, the different support tools in technical analysis. But then it's up to you to choose a strategy for yourself, what you would wish to perfect your skills in. It's just perfection. You have to choose your best. If trend line is what you want to go for, come on, do your due diligence. Learn it more. Get to know it more. You know, approach it, learn endlessly. Like approach it and then own a strategy. You know, there's no fixed strategy for anyone. It's up to you to choose one, stick to it, perfect it. And the more you use a strategy, the more you become so conversant with, the more you become so familiar with it. Sometimes it will reach a point where upon opening the chart, you don't need to do much. Like everything is falling out perfectly. You know, like you seeing the picture, you know, because you have a strategy, you are used to it. It's what you use. It will help you so much track the market price movement. And you will know which market it would be good to make entry and which is not. All right. So it's about you choosing a strategy. We can share many, very many, I believe, very many, but it's up to you to choose. Now, there are a couple of different supportive tools, but I'm going to talk about maybe 4 or 5 that aid so much in technical analysis. Number one is trend lines. And I think it is the area I'm going to focus on in my session as I take you through this week. It's trend line. All right. Which we're going to look at in details. But basically, these trend lines are key price reaction level or key price points where these assets historically struggled to move beyond. All right. So it's those price reaction level. It's actually a price level where the market price upon approaching tend to react, and the reactions are always two. Yeah. It will either be stopped or it will go through, right? So if it go through, we call it a breakout. If it is stopped, depending on the direction it was taking, if it was rising upward and then it gets stopped, then we call that a resistance. It would have encountered a resistance. Yeah, right? But then if it was in the course of a downward movement and then it gets stopped, right? Then we call that price level as a support. As simple as that. If it was in the course of a rise and then it got stopped, that particular price level that has stopped it is called a resistance. A resistance what? A resistance level. So that's basically what the trend lines are. There are price reaction, there are actually key price points where this asset historically struggles to move beyond, right? Or where it can find a buying pressure or a selling pressure, you know, depending on how these are just terminologies. I don't often so much want to do the big terminologies. I tend to use simple ones. So that is basically what the trend line is. So it's area that we are going to focus on in detail. The other support tool is actually the chart patterns. You may call it in your own ways, but the chart pattern is another support tool. Which of course with the chart patterns, I think maybe some leader will handle that. But then they are actually specific formation on the price chart that are believed to predict future price movement. Yeah, you've ever heard about people talking about here there is a head and then shoulder. I believe you've ever heard about that. I hear some people talk about triangle formation, you know, and a number of other things, the wedges. So it's something like butterfly. It's just a strategy. It's a formation. It's a chart formation that also some people have actually developed and I've owned it. I've not even actually owning, but I've mastered it, and it is working for them. Yeah, it's really working for them. So there are schools of traders who really go for that. And whenever they see, there's also a W, there's one called a W, which is a bullish signal. The M, there's the M shape, which is a bearish signal. So these patterns here, the people who have mastered it so well and it works for them, that whenever see a formation of a W, it's a potential price bullishness or market bullishness. And whenever see an M formation being formed, it's a critical aspect of a downward movement. So it is a tool. You can perfect it. You can learn the different patterns, and then you get them. Then also we can have the candlestick patterns. Yeah, the candlestick pattern, basically you focus and narrow your analysis based on the candle. You predict you predict future price movement through candle formation, through some specific candle formation on the chart. So whenever you see such candlestick patterns, okay, formed on the chart, you will be in position to tell that the direction of the market is going to be this way. Yeah, so you can predict. Examples of such, I believe, for the all people who have been in these classes often, we have, I believe you've ever heard about the dragonfly. There's the hammer. We have the shooting stars, hanging man, and a number of them. Yeah, these are just candle formation. So they are not just formed. Whenever they are formed, they have significance. There is a lot of communication. There's a lot of information you can derive from them. Once they are formed at specific level of price movement, it should be important to communicate something to you as a trader. And that will help you make an informed decision. It doesn't just appear. They appear at specific points. Yeah. So whenever you see any of those, it's good for you to make decision. Like when you see a hammer, which is one of those that most of the time is formed in the course of a downtrend. It can be formed towards the end of a downtrend or at the end of a downtrend. So when you see a hammer being formed, or what we literally call a hanging man, if it is a red candle, then it should tell you that there is a buying pressure building up. There is pressure building up in the market, like traders want to make entries. Traders are making entries. They're trying to push the market up. Very many people are getting into the market, they're buying. So they're exerting pressure into the market, and definitely after like a session or two, the price would obey and go really in that direction of an uptrend. So it doesn't just come. So all of them have significance whenever you see them. Yeah. So that's the third support tool used in technical analysis. Maybe the fourth one would be the indicators, the technical indicators. This is what we're so much used to, the indicators. We have a number of them. I believe you know them. That's just to mention but a few. We have the moving averages. We have the moving average, convergence, divergence, which is literally shortened as MACD. MACD. We have the likes of the pivot point standard. We have the likes of the Fibonacci, the auto one, because the manual one, it's you who adds it, but then the auto one gets loaded, so it is an indicator. We can have like the stochastic, RSI, which is one of my favorite actually also. I love using it as an indicator. Yeah, so basically these trade indicators are sort of like mathematical calculations that are used to focus, on future price movement. They are like the settings are already embedded in them, right? Once you just add them, they get loaded, and then they sort out themselves. Okay, so it is up to you to just standardize it in your preference. Whatever you want is what you can, that's what you call customization, right? Yeah, it's you to standardize it, to customize it in your own way to suit your strategy. But literally, it will be given to you plainly with everything embedded. Okay, and it tends to actually capture out the market as it is based on the parameters upon which it has been designed. So it captures the market. So it's up to you to now adjust or to customize based on what you want. Yeah, so that is what these technical indicators are. So there are people who may use it, okay? And the people who may use it in combination with another support tool, which will make more sense actually. Yeah, so that is the fourth. And maybe last but not least, there are also volume indicators. Yeah, volume indicators. They're also a good supporting tool. Those the indicators that has basically been designed to measure and track through the volume of a particular asset being traded, the trading volume, either in 24 hours, in 12 hours, depending on your preference. So it displays actually the volume of the particular asset you're trying to analyze, how it has been traded so far, or how it is faring for the past period that you would have chosen for yourself. So it tracks, the amount of trading activities. Yeah. So as it is doing that, of course, it can help you to confirm a price trend, or it may also, help you identify some potential reversals in the market, because when the volume is building up, it shows you that, that the market is getting busier. Buyers are flocking into the market. They want to buy. So the volume is gonna, so the trading volume, tend to increase. And when you see it decreasing, know that hey, people are losing guts, losing guts. But of course, when it has reduced, it will be good opportunity. You can buy before it builds again. So it's a strategy. The indicators that are meant for that. So basically, these support tools, these 4 support tools of Trendline. Sorry, don't mind my handwriting. Chart patterns. We have I talked of candlestick patterns. Talk to each other, the indicators, and I think, the volume. These are good supporting tools. Among others, these are support tools that can really help you manage your technical analysis. Yeah, at least to some extent. Yeah, so I hope we're good, and we followed quite well until this very moment. Yeah. I hear cap pattern. Yeah, double bottoms. Yeah, there are very many. There are those even who are inventing theirs. You'll soon hear about plate pattern, saucepan pattern. Yeah, it's as long as it works for you, you can brand it. Yeah. So So I think we're good. Okay. Yeah. So I think for today, I think that is the extent at which we may build our background to the learning of the week. Our focus in the next class, which is tomorrow, same time, we are going to begin through the trend line, right? That first support area in technical analysis. So we're going to talk about entirely trend lines, and you should expect at least to know, if you didn't know, how you actually identify, okay, and capture or draw these trend lines of support and resistance, and then how you can then use them to determine a trend and then identify opportunities to make trade entries, all right, and possibly exit. Yeah, so how you can also how you establish your margin call drops, and many more. So expect that in our next class. Okay. All right. So I think basically for today we may end here. I hand the ball back to my co-host, Saul. Saul, over to you, and possibly to, yeah, I don't know whether you're there, but yeah, if not, then back to the leader, my leader, Julius Kabanda, my apply. Yeah, so I hand it over back to you, my friend, and maybe say a word or two, and then we call it a morning.
All
Are you
right, all
on?
right. Thank you so
All right.
much, Coach Musa. Today it has been an amazing introduction from scratch. Thank you so much for the amazing introduction. Then tomorrow the battle begins. So I want to encourage all of you to take this 1 week of learning very important, especially when it comes to making entries and exits in the market. I've been able to attend so many schools of traders, but this guy is very good. And he comes at a point of time where we have introduced our new strategy called Bangwa Bangwa. I know he might not be familiar about it, but I will jazz him about it. But then the Bangwa Bangwa strategy that requires you to go in the futures market and take 1%, you need to be able to attend his class throughout this week because it will give you the power to make good entries and exits in the what? In the market. So whether you will be shorting the market or longing the market, he comes at a very important time right now. So the Bangwa Bangwa strategy, the 1% 10x leverage strategy, his knowledge is very key. So make sure tomorrow you keep the time, same link, same time, 7:30, so that you learn this skill, so that when you go to the Bangwa Bangwa, you will be able to bangwa the market so that the market doesn't bangwa you, because the market doesn't care whether you want 1% or 0.5. So before the market bangwas you, you need to be here tomorrow so that you are the one who bangwas the market. Because when the market bangwas you, now, having used the bangwa bangwa strategy, I want to share my screen in a few minutes. There is something I have discovered, and I just wanted to share it here because some of you are always filled with fear and doubt. I have used the strategy, and the strategy is highly profitable. But now my point I want to talk about, I have tried something, and let me share my screen. Now, one thing I have discovered, I'm talking about people who are scared to be liquidated. If you are scared to be liquidated, there is one solution I have found, and let me say it here. Make sure that you only expose 50% of your capital. If you expose 50% of your capital, I've seen this coin get close to the liquidation price, but because I have kept 50% of my capital in my exchange, I don't get liquidated. Give me a one in the chat if that is clear. You see, now me, I love being practical and finding out how people will be able to survive in a business. So make sure when you are trading, you only expose, I don't know if that is clear, you only expose 50% of your capital. When you do that, I have seen the coin get closer to the liquidation price, but I don't get liquidated. Give me a two if the message is home. In the previous sessions, whenever someone is asking, what is that 30%? Man, if you are talking about people who are financially free, don't talk about capital. By the way, I'm not bragging, but when you talk about, I've been here for 4 years. So you think, my friend, I have just started. I've been here for 4 years. I'm very consistent. I am making money. I don't sleep. Even when I make $500, the next day I don't sleep. My blazer, I've seen someone taking My friend, me, I have capital. Don't talk about money. Just talk about trading. For capital, my friend. Yes, if you have $100, put $100 in your futures account. Is the message home? But make sure when you are doing your calculations, let your calculations go for 50%. So what I mean by 50% is, you see someone is now confused. 50%, not 20%. 20% is calculating. So let me explain this way. I have $100. When I'm budgeting my margin calls, my trade settings, I'm going to only use $50. So I'll calculate 20% of $50. The 50, let it remain in your account unused. You don't need to have budget for it. I don't know if the message is home. If you don't do this, even when the market changes, there is a way the market absorbs this money. I don't know. Let me show you. Let me refresh here. It is not refreshing. I don't know if someone has understood. There is a way in the exchange, when you have extra funds, there is a way they keep pushing the liquidation price lower. I don't know if the message is home. So when you have your $100, your 20%, your margin calls should be on a budget of $50. Everything ends here. The $50 should be there, just there. I don't know if someone has understood. Because I don't know if someone has understood. Is the message home? Your budget should be on 50%. You plan your margin calls on that 50. Let the 50 be there unused. Because you
Actually,
see. Mm,
Leader Juliet,
continue,
maybe
continue, sir.
let me clarify. Let me clarify something. Sometimes the other strategy would be, if the 50% is something that is confusing them, the best they would do is, if you have $100, right? Remember, you're gonna, as a future trader, you're benefiting. You want to maximize from the leverage, right? And because you have a specific leverage multiples that you're gonna set. Remember, if you take, for example, just to give an example, 10x, that is a 10x leverage, right? You choose a leverage multiple of 10. It means with your $100, you will be availed literally, up to 1,000, right? Like that is what will be like literally virtual available for you to use how you want. But putting at the back of your mind that is more like a trap because you have 100. So if you use the 1,000 anyhow, and the market goes against you, irrespective of the direction you've selected for yourself, the market goes against you by just 10%. With the 1,000, the virtual 1,000 given to you for trading, you literally get wiped out. You get liquidated because you only had a security of $100, and 10% of $1,000 is already 100. So literally, you have nothing to back up your to keep your positions running. So the strategy is, if you have $100 and you want to maximize from the leverage multiple, the leverage, you divide it. If you wanted to put like 100 in your futures account or wallet, remove 50. You can send 50 maybe to the funding wallet, right? Just to make it easier for you. Then whatever leverage multiple you're going to choose will be based on what is available in your futures wallet. So you'll do, if it is 10x, that means you're going to have literally about a virtual fund of $500. Then it is within that now that you're supposed to set your trading, so that if you reach a point of almost liquidation, you have a reserve of $50, which upon transferring from funding wallet to your futures wallet, you have an extra 500 virtual fund that is going to push your liquidation price so far away, right, from the market price, which was about approaching your liquidation price. I don't know whether that made sense there. Yeah, it's a strategy that works well. It really works well because sometimes you will easily forget and you work within the budget or whatever is there in the fund, in the futures account, and then when the liquidation comes, or when you're a virtue of a call has been made for you to be alerted of a chances of liquidation, you have nothing to back up to add there, okay? Because whatever you add, depending on the leverage matrix you've selected, just automatically adds up. It multiplies itself. Whatever fund you add in the futures wallet for any running trade, it just adds up. So it's good. It's really good. And then as you're going to devise your leverage multiple, I mean the margin, the margin ratio. Let me just do this. Okay. So if you're gonna, just a minute. Okay. Yeah. So sorry about that. So I was saying, if you're going to all right. So if you're going to set your multiple buying ratios, you have to set it in such a way that any buy order that is going to be executed should be in position to push the liquidation price further. We have known it in the sports market that when any attempt of the robot buying is in a bid to close the gap between the average price established and the market price, that current market price, right? It's in a bid to move them closer to each other, right? Because you want to exit the market earlier. Now, with the futures market, the aim is for whatever buy order that the robot execute, the liquidation price should be pushed away and further away from that market price at which the buy order was executed, so that you keep in the game. You are around. You are not out. You are in the game. Okay? So you set the multiple buying ratio to a figure that will, every other time the robot buys, it almost pushes it, if not by half, maybe 2 times away. There, because you don't know the next buy order when the robot is, when the robot is going to buy the next margin call, you don't know whether it would have reached your liquidation price or not. But it all takes understanding. I know it may seem very new for some people who are just joining futures now, but that's the picture. The margin call drop you're going to set vis-a-vis the multiple buying ratio is critical to your chances of being liquidated or not. It's very key. Very key. You're not going to say you're going to establish a margin call drop of 5%, and there, as the robot is buying, the distance between the market price and the liquidation price before reaching the next buy order is almost maybe 4%. 4%. You would be liquidated before the robot buys the next call. And that is where people are going to be liquidated, especially if you go blindly. I think that's what I wanted just to chip in, Leader Julius. I don't know whether it makes sense, but I hope it has. Yeah.
Sawa. Thank you so much. Have a good day. Have a good day. Okay. So see you on the next call. See you tomorrow. See you tomorrow. Someone is saying futures is killing people here. No, you might be suffering alone. You see, sometimes, let me tell you might be suffering alone when others are making money. As long as you understand what you are doing. There are people in business that make others fear. There are people in business that make people fear. They make people fear. They cause other people to fear. And for them, they are just jokers in business. They don't have goals. They have not come up with strategies to win. They are just there every time. They want to cause others to fear. And they are just in the business for that. So my friend, futures is very good and it makes good money. Eh? It is
Actually,
very good.
Julius, for those who don't know, the futures market is one of the most volatile, the most active market than spots. For those who don't know.
Very right. And Coach Musa is also going to give us signals. Those of you who are in our group 2 Bangwa Bangwa, yes, we shall be cross-sharing them. Coach Musa will be dropping us signals very soon. Those who are in group 2 Bangwa Bangwa, yes, it will be led by Coach Musa, is already there. Hey, and signals are coming, but we shall also be sharing on group 1. Okay? Coach Chris is doing us a very good work in his signals of Bangwa Bangwa. And now Coach Musa is also going to join us so that you people make money. So if you don't know what to do, you can leverage on the skills of other people. We don't need to send any link here. Links are run on our particular groups. And the signals are also shared on Telegram. Okay? So if you are on Telegram, make sure you are absorbing that side. Yes. So thank you, ladies and gentlemen. Have a good day. See you tomorrow.